Morning everybody, thank you for joining us for today's webinar. Before I introduce Steve and Eludia, I'd just like to go through a few things. For those of you who don't know me, I'm Lauren Oakley. I'm the Events Coordinator at Staffordshire Chambers of Commerce. If you haven't used Zoom before, please do not worry. You just need to be aware of a few functions. One of these is the Q&A function, and one of these is the chat function. Depending on whether you're on a laptop or PC, these can be found at the top or bottom of your screen. If you can see and hear me, if you could just pop something in the chat, please. It could just be a hi, just so I know that everything's working properly. Thank you. Morning, David. Hi, Rachel. Hi, Stephanie. Lovely, thanks, John. Hi, Melissa. Hi, Gary. Hi, Mark. Great, it looks like everybody can hear us. For those who haven't used Zoom, you cannot hear or see you. So we can't hear or see you, but you can hear and see us. So whether you're just eating your breakfast, having a drink, please do not worry. Please carry on doing so. Eludia and Steve are happy to take questions at the end of the session. So if you do have any, please feel free to put them in the Q&A box, but these will be answered live at the end of the session. Any that are quite complicated, Steve and Eludia are happy to answer these on a one-to-one basis via email. I'm now delighted to introduce Steve and Eludia, so whenever you're ready, thank you.
Thank you, Lauren. Welcome everybody to today's webinar. Thank you for Staffordshire Chamber for allowing us to come on and tell you all about the new changes to the job retention scheme. Today we're going to go through effectively all the important changes. We're going to recap some important information that you'll need to know, and then we're going to go through on how you go through calculating the new changes in your claims and any other information that we feel is sort of relevant. So and like Lauren says, absolutely happy to take questions at the end. If you've got anything specific where perhaps it's very much a help with a calculation or anything like that, our email addresses are at the end, and we're happy to try and support anybody as much as possible. Great stuff. So without further ado, we'll get stuck into the details. So the job retention scheme, as it was launched in March, and it was predated to the 1st of March, and it took a while to sort of get the detail out and understand exactly what it was going to look like, but we all got used to it and we all knew what it was, and the government kindly decided to extend the scheme, and we had the detail on that on Friday last week. So what we wanted to do is just present to you exactly what that detail is and what the job retention scheme Mark II looks like for everybody. So in terms of important changes to the scheme, there's 2 or 3 really that are really poignant. From the 1st of July, you're going to be able to bring back your furloughed employees in a more flexible manner, which means that they can work any amount of time and they can work any work pattern, as well as being furloughed for the hours that they haven't worked. So you'll still be able to claim for employees that are that you may want to bring back 1 day a week or 2 hours a day, or however you want to work that. The hours that they don't work, you will be able to still put a claim in for. From the 1st of August, so everything else stays the same for July primarily, but we'll go through any sort of little changes to that. But from the 1st of August, effectively employers will be asked to contribute and pay all of the employers' NI and pension contributions. So at the moment, you can claim for the employers' NI and pension contributions for them furloughed workers. From the 1st of August, you won't be able to claim for that. You'll just be able to claim for their gross money. From the 1st of September, employees will also be asked to contribute on a sliding scale, and again that will increase into October for the employee wages as well. So it's a kind of phase out approach from the government, and it has been announced that the scheme will close and won't be extended on the 31st of October. So what does that all mean in numbers? We put together a useful summary. So as you can see, we've got the 4 months ahead of us left of the scheme. The government are making contributions towards employer national insurance and pensions only in July, and then the employer will have the responsibility of those from August, September, October. They will be contributing 80% in July for and up to 2,500 for wages. That stays the same in August. It goes to 70% in September, and the cap is reduced to 2,187, and then that falls to 60% in October, and the cap is 1,875. The employer contributions is that we won't have to pay NIC or pensions in July because the government will be doing that, but employers will have to pay that August, September, October. And again, employer contributions aren't required in July and August, but we will have to top up 10% and 20% in September and October, respectively. What that means is that you're in September, where it drops to 70%, you'll still have to pay your employee 80%, and the employer will have to help and top up that money. So basically, from an employee point of view, there's no change. They would receive, if they're on furlough, they would receive 80% as a minimum, and that £2,500. So who can you furlough from the 1st of July? And this is where there's a little bit of complexity in terms of making sure that you've got everybody in place. And the revenue were a little bit sneaky because the detail came out on the 12th of June, but you needed to have really took action on the 10th of June. So only employees that you've successfully claimed a pre-grant for will be eligible. Employees must have been on furlough previously for at least 3 weeks. So that's where the 10th of June comes in, because by the 30th of June, they would have had to have gone on furlough by the 10th of June to have got those 3 weeks in. But anybody who has been, so if you furloughed an employee in March, and then they came back to work for a couple of months and things have, perhaps downturned where you'd want to put them back on furlough, that's absolutely fine. They don't have to be on furlough on the 30th of June. They just have to have been and done 3 weeks on furlough at the 30th of June, at any point between the 1st of March and the 30th of June. So in terms of following on from that, really, is that to be further qualified from July, is we repeat that statement. So furlough that employee for at least 3 consecutive weeks between the 1st of March and the 30th of June. It's just worth reiterating that person doesn't need to be on furlough on the 30th of June, but they do need to have had at least 1 3-week period in that period. The employer needs to have a UK pay-as-you-earn scheme that started before the 19th of March. They need to be enrolled for pay-as-you-earn online, and they need to have submitted an RTI for that employee on or before the 19th of March, and they need a UK bank account. There is a new claim limit, a new claim cap, as they call it, and this means that from July you'll only be able to claim for a maximum number of employees. We don't envisage this creating too much of a problem, but it's just worth going through it so everyone understands it. But I think it's really there so that it's kind of a backstop for the government, so they don't see an increase in numbers in July. But basically, the maximum number of employees that you can claim in any single claim period, starting from the 1st of July, cannot exceed the maximum number of employees you've claimed for under any claim ending 30th of June. So we just put a little example in there. So if you've claimed for 20 employees in April, 35 in May, and then 31 in June, the maximum number you can claim for from the 1st of July is 35. So it will just not help employees, and I don't think any of these new changes help employees who are only just starting to see problems from COVID, and perhaps had a period for from March to June, where actually they had enough work and now they're seeing the downturn. I think these changes don't help that type of employer. I think they help the ones that are now trying to phase back into work. There's an important point at the bottom though, that this is with the exception of employees who are returning from some sort of parental leave, which I'll come on to now. So like I just said, there's an exception to that cap, and you can furlough an employee returning from statutory parental leave after the 10th of June, even if this is for the first time. So if somebody is returning from maternity or parental leave and they return after, then you can add them to your cap. So, but you have to have previously submitted a claim for any other employee. So this can't be your first claim for the organisation. The employee started parental leave before the 10th of June and returned after the 10th of June. And the employee was on pay-as-you-earn payroll and an RTI was submitted for them before the 19th of March. These employees can be added to your maximum cap. It's really important that you get your paperwork right as well. So for any employees you will have already put on onto furlough, you should have agreements in writing around them going into furlough. So to be eligible for the grant, employers must have confirmed to their employee in writing that they've been furloughed. We've got changes that are coming in July. So the July changes will mean that you've got some flexibility around the way they're furloughed. So you should review all your agreements. The new agreement is required to cover the flexible furlough. Make sure the agreement is consistent with the employment equality and discrimination laws. Keep a written record of the agreement for 5 years, and keep records of how many hours your employees work and the number of hours they are furloughed. The employee doesn't have to provide a written response, but they will, and you do not need to put all employees on furlough to qualify. So just mentioned a phrase there called flexible furlough. I think we're just getting used to furlough, so we've got a new phrase. So I think it's really important that we understand what that means. So from the 1st of July, you'll only be able to claim for employees who have previously been on furlough. You will be able to flexibly furlough workers. This means that you can bring back your employees to work for any amount of time and any work pattern. So like I said before, that these new changes certainly help in those businesses who are now trying to open doors gradually or bring people back to work in a phased manner, and perhaps wouldn't have brought people off furlough, to do 10 hours a month, and would have probably tried to, maybe pick that work up off one employee, where they can now be flexible and perhaps be fair to all employees and bring different people back over a course of a month. So I think it really helps that those businesses are opening their doors again. You will need to apportion the maximum monthly grant between the worked and furloughed hours. So that maximum of 2,500 hours we talk about in July will need to be prorated, and be able to claim the furlough grant for the hours your flexible furlough employees does not work, compared to the hours they would normally work in that period. And we're going to go through how you calculate that later in the slides. Minimum furlough workers. So we talked about earlier that the minimum furlough period before July was 3 consecutive weeks. So until they have completed those 3 weeks, you weren't able to make a claim. So you couldn't furlough someone for 2 weeks and claim for that 2-week period. They had to be on a 3-week furlough period. After July, flexible furlough agreements can last any amount of time. So you could furlough somebody for 1 day, obviously as long as they've been furloughed before. So employees can enter into flexible furlough agreements more than once. So you can bring someone back, take them back, put them back onto furlough, and alternate that through the period. Employers cannot make claims that cross calendar months. So employees will have to make 2 separate claim periods that start after the 10th of June. So basically, for anyone furloughed up to the end of June, you will need to do a claim to the end of June, even if their furlough period crosses into July, and then do a new claim starting on the 1st of July. It's important just to recap on what can and cannot be done on furlough. This has definitely over the last few months been a topic for conversation. You know, an employee that is on furlough cannot do any work for you that makes money for your organisation or any linked associated organisation. So you can't use them if you've got a group, you can't use them in another group company. And they can't provide services for your organisation or any linked association. But they can take part in training, they can volunteer for another employer, and they can work for another employer as long as the contract allows you. I believe you can amend the contract to allow that if it's something that's important between you and the employee. Holiday pay, with all of this, how is holiday pay affected? Furloughed employees will continue to accrue leave as per their employment contract, but you can ask and they can take holidays whilst on furlough. But holidays should be paid at the normal rate of pay. So you can't, if someone does take holidays during furlough, you can't pay the 80% that you may have agreed with them as a furlough rate. An employee, yeah, and exactly that, employees should top up the grant when paying holidays. So length of claim period, as we touched on briefly, there's no maximum length for the claim periods that end before the 30th of June. These claims need to be filed, but anything you do before the 30th of June, the claims need to be filed before the 31st of July. Claim periods that start before the 1st of July must end on the 3rd of June. Claim periods from the 1st of July must start and end in the calendar month and must be at least 7 days. The only exception to that is if you've done a claim to say the 27th of July, you will be allowed to do a claim for 4 days between the 28th and the 31st of July. But the only exception to that is you can do a claim of less than 7 days as long as it includes either the start date of the month or the end date of the month. But ideally, you want to match your claim period to your processing period because that just makes sense and keeps life simple. And you can claim up to 14 days prior to your processing date. So I think it's important for employers to try and get their claims in early so that they've got the cash flow then to pay their staff on payday. So you can do that claim early. What I would say, that's fine when everything's fixed and you know exactly when someone's on 100% furlough, you know what that looks like in advance. If you are bringing people back flexibly on a flexibly furlough basis, then you need to know accurately what their hours worked are. So if you don't know that, then you should wait until you know that figure before you process your claim. So what we've done there is just recapped some information we already knew, just to make sure that that's consistent, and we've effectively gone through the changes. I'm going to hand over to Eludia, and Eludia is going to go through, how you go about calculating this information into a claim and some other useful information. So over to you, Eludia.
Thanks, Steve. So the next part of this webinar focuses on the furlough calculations. Now, before we go into the calculations, just want to quickly recap on what you can and can't include in your furlough calculations, just for any employers that are new to this scheme. So as per HMRC's guidance, you can include regular payments, non-discretionary payments for hours worked, including overtime, non-discretionary fees, non-discretionary commission payments, and any piece rate payments. Now, you can't include things such as, can we get the next slide up, please? Payments made at the discretion of the employer, including tips, discretionary bonuses, discretionary commission payments, non-cash payments, non-monetary benefits like benefits in kind, and benefits received under a salary sacrifice arrangement. Now, from the 1st of July, if you flexibly furlough, there's three information that you need to work out your calculation. So these are your employees' usual hours, actual hours worked, and the furloughed hours for each claim. So you'll need all three information as part of your calculation. If your employee is fully furloughed, then you don't need to work out their usual and furloughed hours. So what that means is you just carry on using the same figures you previously used in your previous claims. Now, just going back to your employees' usual hours, there's two different calculations that you can use to work out your employees' usual hours, depending on whether they work fixed or variable hours. You should work out usual hours for employees using the variable calculations if your employee is not contracted to a fixed number of hours, or if your employee's pay depends on the number of hours worked. So if neither applies, you would simply use employees' contracted hours as their usual hours. So just to run through the steps that you need to do for employees on a fixed hour contract. So basically you would start with the hours your employee was contracted for at the end of the last pay period, and then on or before the 19th of March. So for example, if we use somebody who's on a 40-hour week contract, you would start off with the 40 hours. So what you then do is you divide that by the number of calendar days in the repeating working pattern, including non-working days. So again, going back to that previous example, if they're on a 40-hour week contract, you would divide it by 7 days. So the next step is to then multiply that number by the calendar days in the pay period that you're claiming for. So if you're claiming, for example, for the whole of July, you would then multiply that by 31 days. If you don't get to a whole kind of number, then what you would do is you round up to the next whole number. So say you get like 177.4 hours, then you would round to 178 hours for these calculations. So moving on to employees on variable hours. Now this is just slightly more complicated. So what you would have to do to work out their usual hours is that you would have to use the higher of the average number of hours in the previous tax year, so in 1920, and the corresponding calendar year in the tax year 1920. For example, when you do July, you would usually use the July 19's hours for comparison. You need to calculate the usual hours for each pay period that falls within the claim period. So when you calculate the usual hours, you need to make sure you include any hours of leave where your employee was paid their full contracted rate, such as annual leave, and any hours worked as overtime, but only if those hours were not discretionary. So say, as an example, you've got somebody who's worked 1,500 hours last year. Let's just say that's over 350 days. That gives us roughly 4.5 hours a day. So if for the corresponding pay period, say July 19, they did 6 hours per day, then you would use the 6 hours for your calculation, as that's the higher of the two categories, basically. So once you've got the hours worked per day, you would simply multiply that by the number of calendar days in the pay period. And again, you would round up if you don't get a whole number. So similar to the previous slides. So once you've worked out your employees' usual hours, which I think is the hardest part of the calculation, you can then work out your furloughs hours. For this, you would simply take the employee's usual hours and deduct that by the number of hours they've actually worked, even if this is different to what you agreed. So just one thing to bear in mind, if you claim in advance and your employee ended working more hours, then you would have to pay any overclaims back to HMRC. For any hours your employees work, you must pay your employees their contractually agreed rate. So if you pay the national minimum wage rates, just remember that the rates went up in April. So please make sure that you use the new rates. Moving on to record keeping requirements. So all the workings and your records must be retained for 6 years. So these include the amount claimed and claim period for each employee, the claim reference number, the calculations in case HMRC need more information, usual hours works, including any calculations that were required for employees flexibly furloughed, actual hours works for employees you flexibly furloughed. So in terms of employment allowance, if you're claiming employment allowance, then you just need to make sure that you don't overclaim from the scheme. When working out how much employers and you can claim back from the scheme, you should subtract any employment allowance you've claimed in that pay period. So for example, if you claim employment allowance and you don't end up paying employers and in that pay period, then you shouldn't claim for any employers and costs through the scheme. So if that's something that you've done in your previous claim in error, then you would have to repay this back to HMRC by reducing your next claim. Now this leads us on how to make a claim. Now there's no changes in terms of the information required to make a claim. So if most of you have already claimed under the scheme previously, you'll know that the online portal is really easy to follow. You simply just log in to your Pay As You Earn online account. Just make sure you've got all your bank details ready, your billing address, Pay As You Earn scheme reference, number of employees being furloughed, NI number for those employees, start and end date of the claim, full amounts you're claiming for, contact name and telephone number, corporation tax UTR number or your self-assessment UTR number, and the company registration number. So what happens when you've made an error? So any overclaims must be paid back to HMRC, which can now be done online. You can tell HMRC about overclaims in your next claim by reducing the new claim amount to take account of the error. If you have overclaimed but already submitted your final claim, HMRC will release new guidance on this soon. If you have underclaimed, at the moment, you can't use the online portal to adjust previous errors. So instead, what you have to do is contact HMRC, tell them that you've made an underpayment in your previous claim and it needs to be amended, and then HMRC will then do some additional checks required, so then they can release those further funds to yourself. And then just lastly, we want to just touch on the tax treatment on the furlough grants that you receive. So these payments received by your business under the scheme are made to offset deductible revenue costs. Now this simply means that grant received must be treated as income in your income tax and corporation tax calculations. But of course you can deduct your employment costs as normal. Individuals with employees that are not employed as part of the business, so we're talking like nannies or other domestic staff, they're not taxable on grants received under the scheme. Domestic staff are basically subject to income tax and an eye on their wages as normal. So in terms of our presentation, that's the end of it. We hope that you find that useful. We'll now answer some of your questions, but like we mentioned earlier, if you have any specific kind of queries that's specifically related to your business regarding the Job Retention Scheme Mark II. Our details are on screen. And on behalf of myself and Steve, thank you for listening. Over to you, Lauren, for the Q&A.
Thank you both. That was really informative, and I'm sure it's helped a lot of people. If anybody's got any questions, if you could put these in the Q&A function at the top or bottom of your screen, and I'll read those out to Steve and Eludia. I think we've had one already. So thanks, Dave. Dave said, what is the minimum period of notice to give an employee as you put them on and off and back onto the flexible furlough scheme?
Lou, do you want me to pick that up?
Yeah.
That it's kind of a sort of employment law query, but as far as I believe is that it just has to be reasonable. So if somebody's been on furlough for 2 or 3 weeks and you want to bring them back, you know, if their furlough finished on a Friday and you ask them to return to work on a Monday, I think that would be adequate. But I think as long as what you're giving them is a reasonable notice period for them to return to work, then you know, the employee should be available at all times while on furlough to work once they've had reasonable notice.
Thanks, Steve. If anybody's got any more questions, if you feel more comfortable putting it in the chat box, then please do so. That's also at the bottom of the screen. We've just got a few more minutes, so please take this opportunity to ask any questions. We've got one from Kerry. From the 1st of July, a furlough claim needs to be for a minimum of 7 days. Is that consecutive days or just 7 days throughout the whole month?
Do you grab that or do you want me to?
Sorry. So in terms of the claim, so the furlough claim that you want to apply for the grant, so just needs to be like a minimum of 7 days. So, you know, previously there was a minimum of 3 weeks that you can claim for. So that's just basically 7 days, including weekends from July onwards.
I think Lauren, Kerry's sort of confusing perhaps the furlough period and the claim period. So the claim period is 7 days, and it will be for a consecutive 7-day period. But in terms of the employee going on furlough, they can go on furlough. There's no cap on. There's no consecutive cap. For the 1st of July, so they can go on furlough for 1 day, come off for a day, go back on for a day. So hopefully that just helps.
Yeah, so the 7 days only applies basically for when you apply for the claim online. So basically it means that you can basically claim now every week if you wanted to, if you needed like funds earlier.
Great, thank you. Stephanie says, no questions, crystal clear. Thank you both very much. So thanks, Stephanie. We've got just a few more minutes, guys, so if there is any more questions, if you don't feel comfortable putting them in the Q&A or chat box, there is Steve's and Eludia's email address, which was on the previous slide. Kerry says thank you. Just wait a few more minutes, it takes a few minutes to come through. Looks like you might have answered everybody's questions in the presentation, guys. So I'd like to thank Steve and Eludia again. Like I said, it's been really informative, and I hope everybody's got a lot out of the presentation. For those of you who want to watch the presentation again, this has been recorded and can be found on our webinar library on our website. I'd like to thank all the attendees that has taken the time to sign on to the webinar today. Thanks again, and thanks again, Steve and Eludia. I hope to see you all very soon. Take care and stay safe, everyone. Thank you.
Bye-bye.